Good afternoon and welcome to Charting Points, a technical look at ag markets. My name is Brian Como. Today is November the 7th. It is a Tuesday today. So let's get into what's been going on. A pretty volatile day today in many markets. Trading futures and options. First, I'll read this disclaimer. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate for your financial situation. The material is provided as is and for informational purposes only, and it is not intended to be a substitute for specific financial, trading, legal, or tax advice. Neither Farmers Business Network nor any of its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the statements or any information contained in the material, and any liability, therefore, is expressly disclaimed. Past results are not indicative of future results. All right, let's open the show today with crude oil. Crude oil took a pretty big hit today. There are demand concerns that are hammering crude oil, despite OPEC, who is asserting that demand in 2024 is going to grow by 2 million barrels per day. China did issue some mixed economic data today, and that is stoking some fears that demand projections may not have been factored in, or demand assumptions may not have factored in as severe an economic downturn. Many bulls had also likely jumped on the train when the Middle East looked like it was getting pulled into conflict, which, I mean, it did get pulled into conflict. But today, when the new low came in, I think there was some stops triggered as we kind of moved below this $80 level. And long holders were ejected out on stop loss orders or other such trading. So we've got a bit of a flush today. As you can see, it pierced that previous low, as well as the last remaining 200-day moving average here. So really, from a technical standpoint, we got the market opened up here now. We could see a test even $10 lower at this point, down to $68 without a whole lot of technical support there to hold it up. So we would need fundamentals to change essentially in order for that to move higher. So that's put a bit of a risk sentiment into the market today. Canadian dollar also seeing some losses. So after, these are probably more welcome losses to Canadian farmers, but we saw the market go test about 73 and a third earlier, or just yesterday. It topped out here at 73 and a third, touching that 50-day moving average. It's since moved back down below, and now we're in the 72s again, 72.66 at the time of this recording. So the crude oil is definitely taking a toll on the Canadian dollar, and the strengthening U.S. dollar is just taking a toll on commodities as a whole. I did want to look at a couple of other things here. This is December bean oil. It has moved lower and is testing support here as well. This has continuously been a weaker market. It is having an effect on some of our commodities, including canola. It's just a bit of a mess, but it's interesting because when you look at vegetable oil prices in China, soybean oil has been the one that has been seeing kind of the most gains in the last little bit. So we've been kind of talking about how canola needed to canola oil needed to shore up some of the spread in between some of these rival oils. As we moved through September and October, it looked like canola oil was overpriced relative to soybean oil and palm oil. That's coming in a little bit now. Some of that is reduction in canola oil values. Some of that is recent strength in some of the soybean oil values. So there is moving more towards convergence in some of those markets. Now, China isn't the largest vegetable oil buyer. That would be India. There is some price pressures happening in India right now, particularly with palm oil, just because India had bought a lot into reserves and are now sitting on a pretty healthy amount of stocks, which is one of the reasons why we've been seeing soybean oil on the futures seeing some weakness. Today, we're looking at canola. This is just a 5-minute chart because I just kind of wanted to show what happened in canola today. When I wrote the morning commentary this morning, the Forward Markets morning commentary, that was around in this time frame here. We were seeing some losses. The market gained some momentum as the day went on and kind of tested that highs just above 709. And then it came down through the rest of the afternoon. So this would be about 11 Central Time here, or between 10:30 and 11 Central Time when the tops came in. we've seen it fade out ever since. We ended canola on a loss for the day. Um, that's it's not terrible technical move today. It settled right at about $700.60. But it did come back to test that 20-day moving average that it had broken yesterday. It's just kind of one of those things where we would have liked to have seen some further follow through after the break of that 20-day in order to feel a little bit more bullish. This feels a little bit more like a head fake today, based on what's happened with the other markets. So it does put a little bit of caution into an overly bullish thesis. I do still think that this has an opportunity to run into the 720 to 730 area. Probably like to put some more coverage on at that point. But today looks like a little bit of a stall, particularly after we moved to new highs and then closed lower on the day. So a little bit of a concern there in the January canola chart. Here's some significant concern in the oats chart too. Now I know oats isn't very well correlated to cash prices, but I do still think that they trend in the same direction. It's rare, if almost impossible, for the cash prices to track the completely opposite way that the futures do. And this December contract is the most liquid at this point. So we did see a breakdown in the oat market back down to 352. That's a new low. There is some small support here at about 340 and some more at about 330. Maybe 320 here, but it does look like it's magnetizing down towards those levels. So that would be just something to keep in mind. This is the price of cash oats in Saskatchewan. So for the last couple of weeks, we've actually been seeing a decline in oat values. So I don't think today's futures action is going to help that out very much. It's obviously not declining as rapidly as the futures are, but I think the futures does give the opportunity to add some weight to the market. So if you feel that you are a little bit undersold on oats, getting up to recommended or comfort levels there would probably be a good idea if this futures market is going to flush. Something on the corn chart here that I wanted to kind of outline. We've seen a triple test now of this support at about 468. So here's the first test in the middle of September, and then one just a couple of days ago, and now it's hammered down and done that. So if we can bounce this corn market tomorrow and move it above that support level, I think that would be a really strong indication that that support level is going to hold. But the other analogy is you can only tap on a glass floor so often before it starts to give out on you. And so we're tapping at that glass floor again in the corn market, and it could signal a bit more of a move lower if it does break that support. So that's something to watch as we go into the overnights and into the day session tomorrow. Kansas wheat also had a bit of a hard day. We saw reports that prices in the Black Sea were rising, but there just isn't as much demand, particularly for U.S. origin hard red winter wheat as the market would like. It kind of moved down or back to test some of these previous lows. So again, not necessarily a change in the charting pattern as of right now until we make a new low. But this short rally that we saw here a couple days seems to have been exhausted now. So continue to see kind of resistance at that 20-day moving average. And I have drawn some trend lines on here as well. So if it can muster a break above one of those, actually this 660 area here would be a place where there might be some strong resistance. So if we ever kind of move back up above that range, that might signal some further strength could come. But today's a little bit concerning as we move back towards support in that market. Minneapolis is I guess Chicago. I didn't put a Chicago chart in here, but Minneapolis is kind of in the middle of that range. It saw a couple of days of strength as well, closed right on the 20-day moving average as well. Hasn't tested support yet. It is a little bit stronger. We are seeing some demand come in from Japan, as I mentioned this morning, for some higher protein wheat. So that might be helping this market out a little bit today. But still very similar patterns between the hard wheats and even Chicago at this point, which is all very neutral in nature, near the lower end of trading ranges. One bull market I wanted to talk about here was soy meal. Now, soy meal has been bullish for the last 4-5 weeks now. But it seemed to be coming off as we got through some of last week, and then early or on Friday we saw a move higher. Monday it backed off. Today we saw another new high in this market. So this market is still behaving very strongly. It was up. It was one of the market leaders, I think 1.7% or something like that by the close of the day. So that is continuing to support the bean market, but I'd hate to see what beans would have done if that hadn't happened today. We did see a move up to about 1380 on the beans today. Nice move if we could have sustained that, but we actually closed the bean market just a touch lower than the open. So it is clocking in a loss on the day, even though it did kind of make a new high. Still not overly concerned about this chart. As you can see, the 20-day moving average is moving higher here now, so we could see some continued momentum from that. That's going to come across the 200-day moving average pretty soon, which might add some technical strength to here as well. As you can see, the resistance up this stairway here is pretty weak. I mean, you wouldn't want to necessarily count all these highs. So really, I'm looking kind of towards this 1420 market for a move here. I think that's possible with the weather story in Brazil. I think that's possible with the supply story in Argentina and the inflation story in Argentina. So still kind of expecting a test of that 14, at least into the 14 to 1420 range, somewhere in here. So today just could have been an off day. I do think that this market could still lend some support from the soybean meal market, but did want to kind of leave on a high note today. So hopefully this was a nice and short and succinct charting points. I'll let you get back to the rest of your day, and we will see you again later this week. Have a great day.